There's going to be an ebb and a flow between the enablers and the transitioning firms and what is investable at the moment, sort of going back and forth, we envision for the next 10 to 20 years.
We're talking about huge amounts that need to be invested and then topped up with other tiers of financing on the debt side, etc. We're concerned, and that's why we're moving in.
I find it interesting that a company like Rio Tinto is now moving into the scandium and the tellurium markets. I mean, the narrative always used to be these major miners never touch these tiny markets because they don't move the needle on the balance sheet. So it just gives me pause to wonder, well, what does Rio Tinto see in these tiny niche markets that the rest of the market is missing?
We're going to see more securing of supply chains. We're going to see more like Tesla, investments in mines. I wouldn't be surprised if OEMs start having miners on their boards and specialists on their boards going forward, just to make that transition.
We will probably see more discussions, especially around recycling. I don't think we've seen a lot of this talk at the moment, but I personally think that's going to be a big theme, maybe for the next decade, especially around battery storage, where you don't have many of these assets operating. So they are right now new assets, but in 10, 15, 20 years, what are we going to do with these equipments?
This is One-to-One Mining Investment Americas. We're going to be focusing on the energy transition and how it's going to be enabled through metals and mining. I'm very grateful to have everyone with me today, and I'll just introduce everyone quickly. I have Kimberly Berman, who's analyst and special projects lead at in the equity research team at BMO. Chris Berry, CEO and founder of House Mountain Partners. Erez Ichilov, who's managing director at Traxys Battery Holdings. Alan Halimi, who's executive director of Natural Resources, Commonwealth Bank of Australia. And Will Thompson, who's managing partner at Massif Capital. A warm welcome to everyone. Thanks for taking time to join us on today's discussion. We've come to a very exciting point in the commodities market in general, and the energy transition seems to be the defining theme for this decade, certainly around metals and mining, coupled with decarbonisation movement and greater ESG scrutiny across everything from companies to capital providers. Will, I just wanted to start with you briefly. This is the first time I think we've had you speak for us, and I wanted to get a quick introduction on Massif Capital and then also your investment style. And then could you ask, what does the energy transition mean to you as an investor within metals and mining?
Yeah, well, thanks for having me. So Massif Capital is a long-short equity hedge fund. We invest in real asset businesses, primarily in energy, materials, and various industrial sectors. About a third to a half of the portfolio is invested in mining companies at any given time. And in general, especially at the moment and for about the last 3 years, we've been specifically focused on the transition to a low carbon economy and investing in what we consider to be firms that enable the transition and that firms that are themselves transitioning. So a transitioning firm would be maybe a steel manufacturer or chemical producer that produces their goods in a carbon intensive way and now needs to change how they do it. An enabler would be a copper miner, perhaps. So from our perspective, the energy transition looks like a pretty ripe opportunity for the real asset businesses that we invest in, probably for the next 2 decades. The transition is going to be very long term. It is much more complicated than the current narrative in the media. The idea that we can simply convert to EVs and install some renewables really does a disservice to all the businesses that are economically critical that need to transition. Our general approach at the moment is to mostly be invested in enablers, which is why we're pretty heavy in mining, about 50% of the portfolio at this time. Those are going to be copper, lithium. We don't have anything in nickel, but various different metals, and we can talk about that, I guess, at more length later. But there's going to be an ebb and a flow between the enablers and the transitioning firms and what is investable at the moment, sort of going back and forth, we've envisioned for the next 10 to 20 years.
Yeah, certainly. Do you concentrate your fund to any particular size of mining company within those resource stocks that you hold? Are you looking mostly at the junior end? Do you see like that, the long-term nature of the transition makes perfect sense to invest now in the earlier stage companies, or do you hold a mixture?
Yeah, so we tend to divide the world of mining into geological plays, developers, and producers. We tend to stick to the development side of things. So post-geological discovery, during the initial fundraising and the initial sort of de-risking of an asset via permitting and initial construction, that tends to be where we focus. We usually have a market cap minimum about 150 million. In terms of getting pure exposure to the transition, we think that junior or development opportunities are a better opportunity than some of the majors, the producers that exist already. You can certainly buy into them at interesting points in the commodity cycle, but our sort of research, given the high correlation that the well-established producers have with the underlying commodity price, you don't often get a non-commodity price catalyst, and we're always in search of non-commodity price catalysts for our investments.
Okay, that's a good overview. Thanks. Just coming to what you were saying about enablers and transitioning firms, and then also this perhaps misconception of how quick the energy transition is going to come about in the media. It seems that there's a sort of tier of the media that's latched onto a trend or something that's happening now. But you were saying, in your view, it's not a simple equation at all, as we all know. What do you think are some of the sort of stumbling blocks or the misperceptions out there around this switch to all electric or EVs?
Yeah, well, the most obvious, I think, for this audience in particular, and the most relevant is going to be the sort of extremely well-funded downstream side of the battery metals. I think you talk with someone like Benchmark Minerals, and they'll tell you that China's building a gigafactory every week or something like that, or every other week, and in the United States it's every 4 months. But we're certainly not building lithium, nickel mines, cobalt, copper mines. We're not building any of the inputs into those downstream sectors at the same pace. So where all these people are going to get their raw materials, I don't know. I think VW obviously had their power day a couple of weeks ago. Our math was that the 6 or so gigafactories that they plan to build in Europe would have consumed the equivalent of like 60% of last year's lithium production, all by themselves. So they're going to build, I think, 240 gigawatt hours per annum of battery capacity. It would just consume huge amounts. So that's the most obvious place. I think there are less observed tensions in places, particularly in industrials, such as chemicals, steel, cement, these businesses where the actual process is carbon emitting, and where real R&D and science needs to occur in order to figure out new ways of actually making whatever the product is, are going to be the biggest stumbling blocks. And those are sectors that just people aren't paying as much attention to. The easy, simple solutions of EVs and renewables is a very compelling story, but you just gloss over the fact that our world is sort of built on chemicals and built on inputs that are made from other commodities in telling that story. And then I also think one of the vastly overlooked stories in the renewable, or in just sort of we're going to build out a lot of renewables, is the failures to focus on the grid. And you saw that at play in particular in Texas just recently, and you see it from time to time in California. In the United States, at least, the grid is ancient. It needs significant investment. In Europe, you see them starting to invest in interconnectors and things like that, and a lot more effort. But China has obviously invested significantly in their grid, and the grid revamp is going to be significant, is going to be very capital and resource intensive, and that's an overlooked story also.
Yeah, excellent, fascinating, and a lot a retraining of thinking perhaps needed in certain areas. Erez, could I come to you now? You get the view from Traxys. Could you introduce? Traxys is multifaceted as far as I understand. You invest across the value chain of battery metals. Could you talk to us about Traxys Battery Holdings, and then also come on to that question around the energy transition and how you're positioning within that theme?
Sure. Well, first of all, I think that just on the optimistic side, it's perhaps one of the first panels where we can start thinking about energy transition and battery materials, minerals, etc., and talk of them more in present tense than only in future tense. When we were having these conferences in 2018, 19, 20 was a bit of a hiccup. Everything was still prior to sort of crossing the chasm, I think, in people's minds from early adoption to something that's more mainstream and within consensus. And that's important in itself, because connecting to what Will said, I think we're going to have to practice some sort of a global Kaizen, where besides the perhaps lower hanging fruits, I'm saying that with a grain of salt, of renewable energy and EVs, there's also a lot of other segments that hopefully can take us eventually to carbon neutrality and to cleaner, greener, and safer world. Anything from the food we consume, the ACs we use, the way we produce steel and aluminum, etc. There's quite a lot of components, and we just have to keep pushing continuously in all these directions. Sometimes some segments will run forward, which may be the situation now with EV, for example. And some will, just need a lot of, blood, sweat, and tears to keep pushing and moving forward. Traxys is, as you were saying, we wear sort of two caps. First of all, we're a global commodity trading house, one of the biggest, and I think one of the we've been around for a long time. We can trace us back through a chain of mergers and acquisitions about 100 years. Our biggest shareholders are the Carlyle Group and More Capital, and 15% is owned by founders and management. So we have a big chunk of employee-owned stock and participation, which is a good model. In addition to our participation in the supply chain, basically anywhere from mine to in this case the cathode and the anode manufacturer, the cell manufacturers, we also invest. We do it either through sort of asset-light type of more pre-export finance, working capital, supporting the debt side of either expansions or going into business situations. We've been doing that for a long time, but we also invest. We have subsidiaries called Traxys Projects and Traxys Battery Holdings, and as of LME Week 2019, when we announced it, we went into a partnership with Panellists, and we're working together on developing battery material and energy transition assets. We went into 2 transactions in Quebec this year, in Vermont graphite and Nemaska lithium, and we're looking to expand further. Initially, our focus is sort of pan-Atlantic, if you will, just looking at EVs of the 100 million new passengers cars sold more or less every year. About half of them, just in terms of market, are on both sides of the Atlantic. And as Will was saying, a lot of downstream is happening there. We also, and again, for us that are in the sector, it's pretty clear, but maybe for others, it's not. The biggest narrative here and the biggest, the biggest cloud that can potentially rain on our parade is availability of materials. I think that in terms of getting everyone on board and crossing all these early adoption and then public opinion, if you will, everyone's convinced. I think pretty much everyone is convinced. People, are, I think, over The range anxiety to some extent, we're close to price parity. Everyone understands that renewable energy is important. There's, we're always talking about, electric, autonomous, shared. I think that, even shared with COVID doesn't necessarily mean sitting next to each other, but shared as in terms of, do you need to own the hardware in order to get mobility as a service? And the same thing to some extent is true about energy and energy storage. And look at the vanadium, vanadium leasing models of electrolyte and so on. So everything from that perspective is moving in the right direction. The regulators, the lawmakers, the downstreamers, the OEMs that are willing to accept that instead of pumping 85% gross margin on some of their old models that returned the capital already 100 times, need to actually transition and and build those gigafactories and assembly lines and everything that will enable the transition to renewable energy. We see now that storage is becoming part of any solar project, any wind project, and so on. So we're getting there. The one thing, and that's the narrative that we as Traxys, from a commercial perspective, are gearing ourselves to be ready for. And as investors, where we invest, guessing the prices of commodities is, as we all know, is difficult, and you can always get it wrong. But if you follow the narrative properly, you definitely see here that the bottleneck that we can help unclog, that we can make a difference with in all this, global Kaizen effort, is to try and make sure that projects actually go into production, and those that go into production succeed in, getting financed properly, in sound logistics, being as regional as possible, lowest carbon footprint all the way through, and monetizing properly so that they can return capital to their equity investors, and so that they can perhaps set aside some money to reinvest and expand, because there's going to be a serious need for expansion. And just to end on that narrative, and why, when we were asked, when we want to put money to work, and we are talking about relatively large amounts, it was important to understand that if you think about the level of underinvestment and the capital that's going to be required, we're talking about, a grain of sand, and then, a whole beach. Because take lithium, for example, right? If you look at a hard rock project that's integrated, $25,000 per annualized ton is the capital intensity. You need 1 million tons, that's $25 billion. Take copper, you need another 5 million tons of copper by the end of the decade. That's the biggest winner, I guess, in any configuration. At $10,000, that's 50 billion. And nickel is what? Anything, take $50,000, do your multiplications again. Assume that half of it is from equity. Assume that some of it, can be solved through technological advances, through some, recycling, through some expansions of existing projects. But we're talking about huge amounts that need to be invested, and then topped up with other tiers of financing on the debt side, et cetera. We're concerned, and that's why we're moving in, and we're trying to find projects that are geologically sound, and we can take them forward and help make those battery materials to be in the middle there between the ground and the downstreamers and the OEMs.
Yep. Excellent. I'll put it to the rest of the panel then, and this is touching on a point that someone's already submitted as a question, picking up on some of the things you said there, as the availability of funding. Is there enough going in? Obviously, everyone here on the panel is involved in or does deploy capital, but is there enough going in to meet the demand side? As Will alluded to, lithium demand in the sort of projections of some of the European battery cell manufacturing companies alone, annual lithium production isn't going to satisfy that. Is there enough capital going in now? Probably not. Where's it going to come from? Chris, do you have a steer on this key question, really?
Yeah, and it's always been a key question. I mean, I have maintained for a long time that if we don't hit, let's just say, consensus EV penetration goals by 2025 or 2030, it won't be because we're not interested, buyers don't want EVs or whatever it is. It'll be because of a lack of availability of batteries and battery cells. And that, of course, stems from a lack of raw material. I mean, I think, the most notable source of funding in the broader financial markets these days is, of course, coming from SPACs. The numbers that I have seen, there's been about 80 billion US dollars raised year to date for SPAC deals across about 265 distinct deals. That's more than last year, all of 2020. And so there have only been, I think, 3 SPAC deals that I have seen that have focused on the upstream portion of the mining supply chain. MP Materials, Deep Green, and then Sir Mick Davis with his, I guess, venture into graphite. I'm sorry, I can't remember the name of that one, but
Blue Vision.
yeah. So the bottom line is, look, I mean, you don't want to sound like a Pollyanna here, but as Erez rightly mentioned, this is a very capital intensive business, and it really does form the cornerstone of this whole transition. And I really agree with Will when he said that, it's complicated, because it is. We're very familiar with the big 6, right? Lithium, cobalt, graphite, copper, nickel, and manganese, and what we're going to need there. But I find it interesting that, a company like Rio Tinto is now moving into the scandium and the tellurium markets. I mean, the narrative always used to be these major miners never touch these tiny markets because they don't move the needle on the balance sheet. So it just gives me pause to wonder, well, what does Rio Tinto see in these tiny niche markets that the rest of the market is missing? So again, there's a lot we can chat about. Producing this material to spec, supposing it is funded appropriately and adequately, is no longer enough. Obviously, the ESG focus coming from regulators, coming from investors is huge, and I think that has the potential to potentially drive up costs as well. So, but we can get into that maybe over the course of the hour.
Just to throw something in there, with the commodities price boom that we've sort of seen recently, aren't the public markets opening up to junior miners a lot more than they were, say, in the bearish period throughout the 15, 16, 17, etc. If you look at the valuations of some of the junior mining companies in the battery metal complex, they're looking a lot better and a lot more well capitalized compared to how they were. So are things changing? Are we going in the right direction? It just needs a lot more.
Yeah, I think 2020, it was a weird year for a lot of reasons. I mean, typically, as I think was mentioned beforehand, the commodity price leads, and then the shares, whether or not it's the major producers or the juniors, follow. And what I noticed in 2020, in particular in lithium, was, all of these companies' share prices were way up, but the narrative was that, lithium pricing and the markets were in the dumps. And that really turned on a dime, relatively speaking. So, yeah, Lithium America is raising 500 million, Sigma Lithium raising, I think, 42 million Canadian, roughly. There were a lot of pretty sizable raises given the uncertainty in the immediate term for this market. But I think you're right. I think a lot of people, whether or not it's the technologists, governments, investors, or corporations themselves, have realized that, you can pick your cliche, right? The horse is out of the barn or the cat's out of the bag, and this is changing, but it's not going to happen overnight. And so I think the money starting to come in is indicative of that for sure.
Yeah. Kimberly, could I turn to you just because you had a view on, the funding gap rather than remedying the gap you mentioned there?
Yeah, I think that, there's I just believe that there's a moat in between the miners, the battery cell manufacturers, and the OEMs, right? And the OEMs, they don't necessarily understand the battery technology as well as they portray. And that takes time, because I've heard several times in my discussions that, a cathode chemistry, you can just drop it in. It's no big deal. They can change the lines overnight, right? And that's just not the case. And so the OEMs will say, what are they saying? This is crazy. Basically the battery chemistry is the battery chemistry till the whole design life of the car. And you just have to look at Tesla Model S versus the Model 3. They haven't changed the chemistry. They've only tweaked it in the Model S, but it's not the Model 3 chemistry, right? So this design life, there's very little room that you can do throughout the design life of the car. So that's number one. That's what the OEMs are dealing with. The battery cell manufacturers, they're dealing with, razor thin margins because, OEMs want a fixed price. And they're dealing with, a lot of the other battles of, trying to source their raw materials sustainably, trying to remove problematic materials like cobalt. They're trying to design their cells so that there's, that's propagation. So basically what the industry is trying to do is trying to raise that nickel, but and take away one of the key components that keeps it safe within the battery cell. So that means what that means is that you have a thermal event that is catastrophic versus just smoking with other types of batteries like LFP. So this is what the battery chemists are working at, and they have to line themselves with the OEMs. And then you have the battery mining, which is increasingly becoming, targeted for sustainable practices. And we're seeing that in all over the world. And so right now, regulations are coming down that you're going to have to, have sustainable supply chains. So that's an additional expense. And on the mining side, on top of that, is that it used to be that you would just make a whole bunch of nickel and then you'd sell it to like 3 or 4 suppliers. There was no change in the makeup of this. There's no extra processing. And what we're seeing is that there is extra processing. Like one company would want one thing and another company would want another type of chemical formulation or an extra step. And so you've got this disjointedness happening. So you've got this intellectual moat, I call it. And then you have this disjointed, fragmented industry. And what we're seeing is that it's not going to be the same chemistry for all OEMs. I do believe that LFP is going to make its way outside of China just because of BYD's technology, CATL's technology. VW, hinted at that. CATL is coming in there. Yeah. So I do think that's going to be good for the industry. So that's going to be good for the industry. It's not going to be great for nickel, but it's going to be good for the industry. And I just think that, when going back to Will's comment about the media, and it's very frustrating for me. It's because, my job is to bridge the gap between the mining side and in-house and the technology, right? And what's technologically feasible. And so I do these tremendous deep dives, right? And I talk to the scientific community all the time. And there's this general frustration of what the real story is. And so, like I always say, and Chris will laugh, is, technology takes time. A tweak is never a tweak. And so this is going to evolve, right? And even when you look at VW, they said, oh, well, they were supposed to have the ID3 on the roads like 2 years ago, right? I mean, this stuff takes time. So we're going to see more securing of supply chains. We're going to see more like Tesla, investments in mines. I wouldn't be surprised if OEMs start having miners on their boards and specialists on their boards going forward just to make that transition. And I just wanted to highlight that the OEMs other than Tesla, and this is something that people don't really understand, is that they are between a rock and a hard place. They have the regulations on the other side, and then they have the changing market dynamics on the other side. And they have a very fine balancing act because they have to keep their current workers happy while planning for a very different future. So they have to reskill so we're going to see protests. We're going to see social unrest happening because, especially in Germany, because, the car industry is so, well-tuned machine, and you're changing that. You're changing people's livelihoods, and then they have to reskill. And I think in general that maybe Germany will be able to do that because they've done it in the past, is reskilling their workers. But I don't see I find it like just, GM just lays people off, right? They just lay people off and that's it, right? And so there's a different market dynamic. There's a definitely, the OEMs are in a rock and a hard place. And I think people just don't really understand that. And that's what gives Tesla the edge, because they don't have to deal with that, right? So they have already a market advantage just because they don't have to deal with that on top of the advancements that they've made.
Yep, they're not adjusting from an old internal combustion engine model. I see what you're saying. Yeah, and so some of the incumbents have got that transition that they're dealing with. Yeah, it's a fascinating landscape. Alan, could I just bring you in to get your thoughts and also a quick snapshot of how you're providing finance, to mining companies within this energy transition thematic?
Yeah, sure, absolutely. So on our side, basically, the way we've organized the business is that we decided to combine basically mining, but also the rest of the value chain, I would say all the way up to the power generation financing as well, because we've seen that transition happening a couple of years ago. And we've seen actually some of the early movers, large clients we have basically decided to transition. You had some of the big oil and gas companies, Shell, BP, and others decided to make that move a couple of years ago. So that's how we organized the business. So I look after mining, but also the clean energy finance as well, because combining both makes a lot of sense. And look, I think I would agree with all the panelists. I think here we are going through a new revolution, right? I think we are just at the beginning. The world is just moving toward, I would say, probably a more sustainable way, moving away from fossil fuel. And that basically, at least for us, the way we decide to deploy capital, we view it in a couple of ways. So you have a large mega trend, which is basically the energy transition, and you have a couple of underlying themes. So number one, you need obviously to make the power grid a bit more clean and remove all of these, fossil fuel plants. Actually, it's been great for all of us, to rely on this, carbon intensive plant. We've got power, we've got all of that. We've been relying on that, but it's not sustainable. So we're moving away from that. So that's number one. So you need basically solar, wind, and I think we'll mention earlier some of the issues around the transmission lines as well, and some of the intermittency of clean energy and renewables. That basically brings in battery storage that we'll see more and more. And we're involved in a number of financing for standalone battery storage, especially in California, where you had a massive blackout last year during the summertime, where you had the power coming from wind, solar, happening at certain moment of the day, but not matching the demand. So that's creating big issues. So how you solve that? You need to have battery. You need to have basically innovations around that. Basically, the other trends we have and theme is basically the electrification of everything. So EVs will be a big part of it, but it's also all the machineries as well, which are going to change. And, it's not necessarily to our day-to-day life, but also for the mining companies as well. Yeah. If they want to move toward like a net zero emission, they will need also to follow that trend, trying to change their fleets. The technology is not necessarily there yet in terms of cost, I would say, but it's going to happen. It's going to be there. So, you need to change your fleet, your underground equipment to probably more battery power type of equipment. Could be more efficient as well. You don't need the big ventilation you have for underground mining operation when you don't have diesel powered equipment. So could be a lot of plus as well. But so we see all of that demand. So that's how we've been following the markets. And then we decide to deploy capital. So as I said earlier, basically in terms of financing directly the miners. So big commodities like copper, cobalt, nickel, lithium. These are the commodities we have fairly bullish view to a certain extent for most of them. So there is big supply and demand. I would say dynamics here that the panelists touched on. And then basically when you move up the value chain, we finance also equipment as well for solar developers where they need to go and buy basically the panels. We finance that as well. And, that needs solar panels, need copper, silver, and other materials. And then, you go and you also, you move up the value chain financing, basically, as I said, battery storage, but also new types of battery storage. Like, the thing is you'll have probably some sort of issues in terms of supply, but maybe the grid will not necessarily rely on a Tesla battery pack or on a Siemens Fluence AES Corporation type of technology, but you have other type of battery like pump storage, which is not a new technology. It's been around for a long time, but even this type of infrastructure, they need copper. So the demand is certainly going to be there. And probably going back to Chris and Kimberly's point, around the media and around basically at the market, I think there is probably a lack of awareness about how mining is difficult, generally speaking. And, you have basically the way things are being shaped. I think God decided to place the commodities into certain place of the world. And, the other day, I was having an internal conversation with someone outside of our, natural resources group. And the question was, what will be the cost of cobalt in order to basically trigger new deposits coming online? And the answer is not that simple. It's not a question of, cobalt will go to I don't know, $30 per pound, and you have immediately, new deposit online. Absolutely not. You cannot detach yourself away from DRC. So now the whole question around ESG and who wants to be associated with that, how the capital will be available to basically finance project down there, or even having like, a Tesla or, Volkswagen or any of these large OEMs who wants to get minerals from these places. That's going to be, I think, a challenge, and we'll certainly see, I think, a lot of volatility. That's going to be translated into prices as well, commodity prices, but also, I think, to a certain extent, innovation. And probably down the road, we'll probably see more discussions, especially around recycling. I don't think we've seen a lot of this talk at the moment, but I personally think that's going to be a big theme, maybe for the next decade, especially around battery storage, where you don't have many of these assets operating. So they are right now new assets, but in 10, 15, 20 years, what are we going to do with these equipments? You have large, toxic chemicals inside. So that's going to be, I think, probably also a next step of the future of mining as well, around recycling.
Yeah, certainly some excellent points there. Well, let's come on to some of the commodities in particular then. You mentioned copper, and you can't get away from the DRC, for instance, and where these resources are located. But I want to go around the panel and just get a take on how this landscape might be changing. Is Canada, for instance, is Canada opening up more within the battery metals complex to be a supplier of this to US industry and US demand, or is it simply a case that we can't ignore the quality of the deposits in certain more challenged jurisdictions? And how do each of you individually within your work go about assessing or looking at investing in or deploying capital with projects in different jurisdictions? Perhaps let's go around again. Will, are you favorable to the Canadian juniors because of the mining friendliness of the jurisdiction, or do you see greater opportunity where the deposits are really good, but the actual logistics or political overlay might be a bit more challenging?
Yeah, so I think that from our perspective, we are in some regards geography agnostic. And so the political risks, we view political risk as a people issue. There are management teams that have proven themselves capable of operating throughout Africa in all sorts of different locations. There are management teams who have proven themselves incapable of handling First Nation risks in Canada. And so, political risk is very much a question of the management team. And so we are going to sort of evaluate the management team, evaluate the projects, and sort of combine that analysis before we take a position. Right. And I think, there's just, Mark Bristow comes to you and says, I'm going to open a mine in Africa. You're going to say, okay, where do I send the check? So some people can just operate in different locations that other people can't. From a exposure perspective, our copper exposure is in South America and Africa at the moment. Our lithium exposure is in South America. And we have a couple of niche metal exposures in Africa. We tend to think of copper as being having a solid place in a portfolio for the long term. you may have to shift your positions around, but the metal itself is probably a good foundational metal in a portfolio. There are other niche metals that are going to have more of a boom and a bust cycle. Some of the platinum group metals, perhaps tin, maybe manganese, some of these rare earth metals. These metals have more of a sort of commodity cycle on steroids. And so you're going to want to cycle into and out of those a little bit more. So I think that answered your question.
Yep. Okay. And Erez, are you focusing on copper?
I was on mute here for a minute. Yeah. I can hear you.
Yeah, sorry. Are you focusing on copper in particular? Do you think that, do you share the same sentiment as well, that copper's got less of a boom bust kind of cycle nature about it? The long-term fundamentals are certainly there, but is there enough quality supply coming through with these younger projects, these development projects?
Well, first of all, we're very active in copper, let's put it this way, and globally in various jurisdictions, whether it was Kazakhstan, Africa, South America. We have a big office in Peru and an office in Chile and so on. So we're definitely as Traxys very active in the copper space, and it's one of the pillars of our business in various shapes and forms, and concentrate, cathodes, and etc. And we are believers that copper is going to be sort of of the big six. It's definitely the one that you can't go wrong with on the fundamentals. Again, guessing prices, copper. One of the ways of doing it is looking at what was the highest price ever in history. So if you look at nickel, it's only at about a third of its peak. Cobalt is about 50% of its historical peak. Copper is and was much closer this year. But with a good copper project, it's if the fundamentals of the project are good, it's hard to go wrong, I would say. Whether you're going for an oxide SX-EW, or whether you're going for a sulfide concentrate project, usually polymetallic, and that's where the cobalt will come from many times. So yeah, we're definitely bullish copper, and we see it as sort of in a rather if you look at it's sort of almost like a baseline with a reasonable slope, while others can be perhaps more volatile. But if there's one thing we did learn, and connecting to some of the previous comments here, is that as a material, you don't want to be in a position where the whole world is working on engineering you out of a supply chain. And for nickel, it almost happened in 2007 when the price was hitting the 50,000 range, and suddenly the 400 series became the biggest new thing in stainless steel. And steel producers started to find all kinds of creative ways to sort of disconnect the nickel price from the price of the product. So it was steel plus a premium or a penalty, any way you want to look at it, on nickel. Then the global financial crisis happened, and it went back to 8,000, and but and to some extent, the same thing happened with cobalt 2-3 years ago, when it became the life mission of a lot of engineers and a lot of the OEM and cell manufacturing outfits to try to find a way to either reduce the level of cobalt or try to eliminate it.
Isn't that still kind of happening at the moment, though? Like,
I hope not.
Just thinking back to Battery Power Week, by VW, and of talking about the end game being like solid state eventually next decade. But isn't the idea
solid state? Yeah, I guess it's more of a disruption potentially for graphite, but you still need a cathode of I guess.
Sure.
But don't forget that for portable and for wearables, the cobalt oxide battery is probably still the best solution. Cobalt, it's there. There's going to be potentially some squeeze on it, but we already see that most of the cobalt goes into these applications. So and the good thing for cobalt, although the supply is not very elastic, it is linked and hopefully working in the same trend as nickel and copper, just because that's how it's mined as a co-product or a byproduct. But we're definitely bullish cobalt. It's one of the pillars of our trading department and our financing department, and it's something that we've been supportive in large amounts of some of the streams and expansions in recent years. In terms of just connecting again to some of the things that you guys said, besides the big six, as Chris called them, it's always good to look at sub-products within the space. So, for example, nickel sulfate. If you got good industrial projects that are working on specifically making battery grade, and again, it's never going to be commoditized as you're 100%, as you were saying, Kimberly, but with these things, it's close enough. So within, materials with higher demand, less elasticity on the supply side and premiums. For example, manganese sulfate. Manganese is huge. 93% of it goes to steel one way or another. But is there going to be enough manganese sulfate, especially in the Pan-Atlantic supply chain? I'm not sure. That's something to work on, and we actually invested time and money on trying to establish a process, and we're now doing a scoping study on how to process some of our South African manganese into battery grade manganese salt for the Atlantic supply chain. Look at the role of platinum, in hydrogen cell fuels. Look at silver and PV. Look at neodymium magnets in wind turbines, etc. So besides those sort of mega trends, if you will, that, as we all I think agree, we need to make sure that enough of these big six are around, and we don't want, and we want LFP to happen to some extent and to have some diversification where the chemistry is per application, it gets more specific and more tiered, because we don't necessarily want, a global effort on getting rid of NMC. We want everything to sort of stream in the right direction, and to have enough pressure to make it investment grade and to make it worthwhile to actually follow these directions. But on the other hand, not to make it ridiculous to a level where it might become extinct. Again, following geographies, at the moment, what we see, and we're thinking about demand side, first of all, where are the markets? Where are the markets in sense of where are the customers? Where are the gigafactories? Where are the renewable projects happening that will require these materials? So there's enough to be done on, in North America, and I guess the Americas in general, and in Europe, for a long time, just to catch up with the APAC supply chain. There's a lot of work there. There's a lot of investment, before you need to perhaps expand and become more exotic. But we have a lot of activity in Africa. We have a lot of activity in Central Asia, and I wouldn't say we're agnostic, because when it comes to equity investments, we are at the moment a bit more focused on the Atlantic. And on both sides of the Atlantic, if you will. But our first, investments this year were in Canada, North America. There's definitely it's a matter of building supply chains that are shorter, make them more stable, and make their carbon footprint, less evasive and less should I call it onerous, if you will. So our strategy is not, and I think I'm connecting to what Will was saying, it's not a matter of politics. It's not a matter of taking any judgment. And actually, if we're going back to that global Kaizen, we actually want to make sure that every jurisdiction in the world becomes a tier 1 jurisdiction, in a sense that it practices the ESG standards, that it treats its employees fairly, that the communities enjoy the benefits, and that everything from mine onwards is done in the greenest way. You need to recycle. We invested in life cycle, by the way, apropos SPACs. There's a life cycle. Life cycle has been acquired by a SPAC, and we're part of the PIPE investment, and we'll be marketing the products, and again, probably mainly in both sides of the Atlantic in the next almost decade. So we believe in that. We believe in the circular economy, but we don't want to leave anyone behind. Ultimately, we don't want pariah states. We don't want pariah jurisdictions. We want to try and help everyone push forward, and and everyone reach the same equitable standards. And you can say, look at Nouveau Graphite again. You can say it's Canada. It's a law and order type of jurisdiction, but still, It's a project that has, sustainable relationships with the Cree Nation, which is the indigenous community over there. Mining, and it's in the beginning, might cost us a bit more. Mining is going to be done with electric equipment. The plant intentionally is only 2 hours away, and it's going to rely on hydropower. So if you look at it wall to wall, a huge effort was made to be able to deliver a product that's green, technically, socially, and environmentally.
Yes.
So this comes to sort of an all hands on deck approach to getting the value chains sustainable, but also working better, bringing more supply online. And it makes me just quickly think about the new administration in the US right now. The energy secretary came out with some very assertive statements around electrifying the economy, looking at China's control of about 70% of battery materials for the EV value chain, wanting to up the US or North American control of that supply chain. These moves are pretty positive, certainly in terms of a statement, but actually, are we seeing change regionally? Are we seeing change in North America with a ramp up of activity investment across the whole value chain? Chris, perhaps do you have a view from where you see it in New York?
Yeah, well, I think, look, the concern around supply chains and reliance on China for much of the supply chain of these metals and minerals is obviously not a new story. We were talking about this in 2010, 2011 with rare earths, and you had a very few members of Congress like Senator Murkowski who actually put some legislation on the table to say, let's streamline permitting, let's try and catch up here. And quite frankly, it collected dust for a few years. The legislation didn't really move in Congress, and now again, because of this focus on ESG, because we have an administration in the United States from the top down, Biden's Build Back Better infrastructure plan, coupled with this sort of, I guess, potential boom, if you will, from economic boom, from, the bounce back from COVID, really paints a pretty powerful backdrop or pretty powerful opportunity to make these investments along, however you want to phrase it, the clean energy supply chain. To be fair, I haven't seen a lot of detail about what is being proposed in the United States. I've heard, President Biden wants to have 500,000 charging points installed by 2030, something like that. And that's all wonderful. But, that money, we need to stop writing white papers and we need to start actually making these investments. Okay. That's how you catch up. And, that's how you sort of take advantage of, I guess, the sentiment that's out there these days around regionalizing the supply chains to a certain degree. Obviously, last week, the Department of Commerce hosted, let's just say, a cross-border meeting between mining companies in the United States and mining companies in Canada to try to figure out ways to work together to integrate. And so that's a really positive step. But, again, it needs to be accelerated. And so the good news is I think that the stars have sort of aligned to make that happen. And we just need to really push, even over the next 2 to 3 to 5 years. This isn't something that's going to happen overnight, but I'm convinced that you could see let's just call it a clean energy supply chain, whether or not it's for electric vehicles, again, cross-border, perhaps Canada, the United States, maybe parts of South America, within the next 5 years. The capital is out there, whether or not it comes from OEMs or investors or wherever it comes from. So the capital is there, the political will is there, and that's always the biggest, I guess, hurdle to get over. And that's really sort of one of the few times that I think people in Washington have agreed on something. And so, look, I think it's a really good opportunity going forward.
Yeah, certainly. I just had a question in about carbonate and hydroxide solid state batteries. I'm not sure what the latter part of the question is, but just wanted to come on to the chemistry bit because we're rapidly running out of time. You see, how far off is solid state? And also, lithium ion batteries are here for this decade. But it seems like from what we've discussed, it's fragmenting. Different OEMs are requiring different qualities or mixes or high quality materials, and those OEMs are in different regions. As you were saying, this could be a good thing for the industry because it's sort of fragmenting the demand, so that we don't have a concentration of demand in one sort of set material that can't be met, for instance. Does the panel, do you see this trend continuing, and how the next 10 years looking in terms of progress towards solid state? And is solid state even the be all and end all? Or are we going to move on from there? Kimberly, please.
I have three things that can answer that really, really quickly. Number one is that solid state is cathode agnostic, right? Obviously need a higher energy density, and you also need a cathode formulation that doesn't expand and contract. So that's number one. So you have to have something that doesn't expand and contract because it's going to interfere with that solid interior. Lithium metal is the holy grail. It's been worked on for over 40 years. And I recently learned actually from somebody that it's actually used in pacemakers right now. So it's actually in a closed seal, hermetically sealed apparatus where it's basically runs for life. And so you get a pacemaker, that's it. Like that's your last pacemaker. It's very hard to put in, and that was actually invented in the 70s. And so there has been some inroads, but this is 70s, right? And this is all of the battery makers that are on the planet today, even they started with trying to unlock lithium metal. And the reason why graphite became the issue, became the winning combination, was because it was safer. And so that basically everybody was working on lithium metal. Then all of a sudden Sony came out with their camcorder battery with graphite, and it was safer. And the reason why is just because lithium metal reacts with everything. So my issue is that when you're in a crash, and I understand the hybrids, and I understand all of those applications, and I think it's very, very fascinating, but whether that can be used in an EV is definitely questionable, because you've got the vibrations that happen while driving these vehicles, and you have the lithium metal, which is highly flammable, which is way more flammable than what battery, and we're having problems with the batteries that are now on the market, let alone having something that's even more flammable. So you have to actually, you can't have any organic material. You can't. It reacts with air. It reacts with nickel. It reacts with everything. So that's why I think that so you just have to think of a cathode that doesn't expand and contract. That's high energy density. You need the interfaces between the electrodes and the solid state material has to be very strong to withstand vibrations, and they have to deal with the flammability of the lithium metal. And these are three huge problems. So that said, I think going back to the original question is that I would be safe to assume that it's going to be probably hydroxide, because I expect that it will be a high nickel cathode formulation, and you're going to need hydroxide for that.
Yep. It's also I think it's important for all the listeners to remember that batteries are sort of fit for purpose, right? They're designed around the various optimization constraints that a particular user is looking for. And so the question about solid state, obviously more energy dense, that's of great value. But the question is it really of that much more value, say, in a car? Let's say we get car EVs up to around 300 miles on average over the next couple of years. Maybe it even gets to 400 on charge. At that point, the question is, does it make sense to be pursuing a solid state battery, or does it make more sense to be pursuing something that might be lower hanging fruit, which is just more chargers that are around? At 300 miles per charge, do you really need to spend the time, the money, and the energy to get it to, whatever a solid state battery gets it to? Maybe there's demand and need for a solid state battery in some really high end cars, but that it needs to be in all cars,
Formula
One. Not. That's one reason why I say the LFPs are being pursued now by Tesla and VW. It's a scale issue. We can scale that much quicker, much broader, much faster, and it's fit for that purpose, the 250 mile single charge, lower end car. So solid state may not be the solution for EVs.
Yeah, no silver bullet indeed.
True.
Okay, anyone else want to comment on the battery chemistry mix before we leave that one, given we haven't got long left? Okay,
yeah, probably I just add one point. I think it's also around, access to capital for, I would say, a relatively new technology, right? I think when you get into this type of new concepts, then basically your cost of capital will increase as well. So in terms of availability, I think that will be also a challenge. I think our view here, it's lithium ion battery. They've been good enough and they've been around for a very long time. So I think we'll see, we'll continue to see some improvement with this type of technology. But I think, other technology, it's going to take a long time before we'll see groundbreaking new type of battery technology just to equip EVs and other battery storage as well.
Yeah, absolutely. We've got a minute left. Just want to sort of sum up on this final question that's come in actually, and perhaps get a very quick answer on this kind of conflict, almost on one of the first points we were talking about around ESG standards and sustainability, and then marrying that up with producing high grade quality materials, the constant inherent problem or challenge I guess the miners face. And then are mining companies going to be able to put a premium on their product if they can guarantee those ESG criteria or sustainable criteria? Are we going to see more of that within the battery metals mining company's case? Or are we going to see ESG putting the clamps on the supply that's coming online? Or maybe everyone's going to start relaxing their regulations over ESG, the pendulum's going to swing the other way, and we're going to open up the coffers to all kinds of mining and source from everywhere. How does everyone see that? Just a quick run through if you've got some comments on that.
Yeah, I'll just be very brief. I don't see end users paying a premium for clean or green material, whether or not it's nickel or cobalt or lithium or whatever, at least not yet. I think that at the end of the day, economics still rules, and people are going to want, the lowest possible price for the product that meets their spec. And that's obviously the crucial point here in the battery metals space. When you get to a point where on a total cost of ownership basis, an unsubsidized electric vehicle is below an all-in cost for an internal combustion engine, then I think you can start saying, okay, well, you know what? EVs have one hand down, so now perhaps we can start charging a potential premium for the pricing of the raw materials. But I wouldn't think you'd see it before then.
Yeah.
So I would just, sorry, I would actually add to Chris's because that's an excellent point on that end of the scale of this green premium is. I'm skeptical of the green premium as well, but what I'm seeing is that. When we talk to clients who are really serious about ESG, they have their own metrics, right? So they might have their like the Norway fund. They decided oil and gas. They decided to drop companies that had mining disasters, and that was their criteria. And so what we're seeing is the rise of, I guess, activism, and we're seeing that ESG is being so investment companies are applying ESG in their own way. And so I'll go into a company, I'll say, oh, well, what names could I look at for cobalt or lithium or something like that? And they're like, oh, I can't do that because of this, this, and this. And so that's what I'm seeing. So, it's going to, this is going to happen. It may not happen, it's not going to happen overnight, but when you have a lot of the ESG and you've got these companies who are taking it very seriously now. And I think that the premiums are going to go down. I mean, it's just everybody's going to be doing this. And so the product is going to be there. And I guess, in the last, I did a lot of work in academics and environmental science and economics, right? And sort of bridging those two together. And, we spent a lot of years not talking about externalities and putting our pollution somewhere else and not really thinking about it. And I think that that's changing. That's changing very fast. And so we're going to see the deglobalization of supply chains. We're already seeing it in the lead acid battery world, because lead is completely recyclable, but they'll have it right on site of the manufacturing site, because they just can't transport it. It's like too expensive to transport it, right? It's better to have it on site. And so we're going to see these local sourcing, and we're seeing that in Quebec as well. We're seeing that, they'll have a graphite mine and Alcon down the street, they could supply the scandium, right? And stuff like that. So we're seeing how these local economies are, and these groups are, working on solving these issues, but it's going to take time, right? It's going to take time. And we're seeing a lot of push from the European OEMs, European regulation. There's a proposal that came out in December 2020 that, a certain amount has to be local, a certain amount has to be, not transported from South America, right? And so all of these things have to be worked out. And I think it's about time. And I think that that's about time. But again, it's going to be a long process. It's going to be a hurtful process sometimes, because I think people are going to lose jobs, or they're going to have to be reskilled, or they're going to have to change their mindset a little bit. But this is all good, and it's all good for our future. So I'm an internal optimist. So.
Yeah, Adam, I'll probably add just one quick point. I think I would completely agree. I will echo what Chris and Kimberly just said. The green premium, I don't believe that as well. I think also, I don't think we'll see any change of regulation. I don't think we'll see any of that being relaxed at all. Instead, I think we'll be, even more stricter. Probably what I probably think, it will probably be a competitive advantage for large OEMs to try to secure clean material. And, as Kimberly just said, could be local sourcing, could be recycling, or just teaming up with miners. I think that's probably something where we'll probably see OEMs trying to move toward, because that's going to be a key competitive advantage. If you want to sell your product, you have to demonstrate it's a clean product.
Mm-hmm. Yeah, a bit like the consciousness around an iPhone that came around sort of 5 years ago, where the minerals come from. You see that diagram broken up into its constituent parts. And people are thinking about it, not necessarily swapping the materials out necessarily, but there's a consciousness around it now. Very good. Look, I just want to wrap up with everyone's hot battery metal commodity pick. If we had to say, the outperformer this year in terms of price, what's everyone most hot on? And we'll just go around. Erez, do you want to just give us yours?
Again, as I was saying, it's guessing commodity prices is a risky game, but and we are following the fundamentals and but if I had to pick something for 2021 in terms of a price to follow, it's probably cobalt.
Yeah. Interesting. Will, do you have a pick or a commodity you're most bullish on within the batteries?
Yeah, picking commodity prices is not really my thing. I would say that I don't know. I mean, we're still bullish on lithium prices a little bit this year. We still think you can go real niche and go something like tin. We think is interesting, but equity, you've got sort of like one option there. So I don't know, those might be something amusing or interesting to look at if you want something really different. Yeah,
certainly. Okay, Chris, do you think there are any outperformers this year?
I would say ex-China lithium pricing.
Right.
That's a good one.
Yeah, Kimberly? Yeah.
Oh, me next? Oh, I was just answering a question here. I think that my two favorites are copper and nickel. I think nickel's definitely the star of the battery world. It's the one that makes the I love LFP. Don't get me wrong. And I never thought when I started looking at this industry that LFP was going to go away. I just think that nickel is definitely something that's the industry has to change a little bit, and we have to sort of decarbonize nickel, because I think that the cobalt issues are going away, because I think that the industry, I know that it won't be engineered out, but the industry is doing a lot to try and clean up that sort of that image. And so but I'm a little skeptical. So I probably would say that cobalt would be next year's metal to watch. So that's sort of my thing. And lithium is one of those things that it's such a tough. It's just a tough business to get your head wrap around. So I'm going to go with. I'm gonna agree with Chris on what he has to say. We've been on these panels a few times, so.
Yeah, so safety numbers. No, Alain, do you have a view from CBA?
Just my personal view. I think I'll probably side with Erez. I think cobalt personally. I think cobalt will probably outperform probably this year and next year as well. It's still a key fundamental metal that we need for the batteries and other energy transition related equipment. So supply demand. I think I personally view as strong fundamentals.
Yep. We've just had one last question come in around uranium as the best green metal. And I just think it's fair to sort of mention it very quickly, considering we're talking about the energy transition. Does uranium have a larger role to play within the energy transition, given the move away from hydrocarbons? I think that might be a loaded question. Will, do you look at uranium within your fund?
Yes, we do. We've been invested in. We've followed uranium for a long time. We've been investors in Kazatomprom since it IPO'd. We think uranium is an important metal going forward in the future, and nuclear is an important source of baseload power. Whether it becomes an important source in or reemerges as an important source in the West, Europe, and North America, that's a bit of a political question. But that it'll maintain its importance in China for certain and many other emerging markets, I think is true. And that it's a nice metal to look at from a supply perspective, just because there really aren't that many suppliers anymore. I think Kazatomprom said that they believe they control 40% of the supply now globally at the most recent earnings call. It's probably about right. So we are positive on uranium and positive on Kazatomprom.
Yep, it's certainly been an interesting period for uranium as well. Well, look, there you go. I would love to sit down and Erez, did you have a point?
I was just going to say that I agree with Will. One of our historical business pillars in Traxys is uranium. We saw a price turnaround now. We always thought that this will be the base load and the renewables will sit on top for a few decades until we either make the nuclear much better, cheaper, and environmentally friendly, or at least psychologically friendly, or maybe that will be redundant. But we definitely thought that this will be the base load and the renewables will sit on top. But to some extent, the energy storage took a bit of the sting away from that theory. Plus, Fukushima didn't help much. But we were definitely we're active in uranium, and we think that uranium as to some extent a clean source of energy is as a sound baseload tier for the market, and to be an enabler of this transition side by side, perhaps at the beginning with storage, is a good narrative to follow. So I wouldn't write it off yet. Let's put it this way, including in the West.
Yep, certainly a big part of the energy mix overall. Well, look, there you have it. We could go on and on about the various commodities, but in the interest of time and your time, I'll end it there. But thank you very much, everyone, for giving your views. We've raised a few really important topics. It's great to get an update there. So thanks to all my panelists and thanks to the viewers. This will be available to view as a replay, and we'll circle that around to everyone that's pre-registered and through the Assay TV. So thanks, everyone. Have a great day.
Thank you.
Bye-bye. Thank you, everyone.